My name is Fallon Goff, and I am a risk management specialist with the Risk Management Agency here at USDA. Today, we bring you a webinar on the Group Risk Plan, known as GRP, which is an oyster crop insurance program. Our oyster crop insurance program is a risk management tool to insure wild-caught oysters against the widespread loss of production of the insured commodity in a county, or in the case of Louisiana, a parish. We understand that production areas may cross county or parish lines. It's primarily intended for use by the producer whose oyster landings tend to follow the average production area's oyster landings. This is referred to as average county landings in our policy and actuarial documents. Our product uses production area landings data as the basis for determining a loss. You may ask, what do we cover? With our oyster crop insurance program, we cover oyster coverage for oysters grown for the fresh market, oysters from your leased or owned oyster bed, oysters that are not grown for experimental or research purposes, and landings of oysters from public oyster reefs are not insurable. Our program is an area-based program. It has a 12-month insurance period that runs from June 1st to May 31st. It offers coverage level percentages for additional levels of coverage from 70% to 90%, and for catastrophic, otherwise known as CAT level of coverage, up to 65%. Our price election percentage for additional levels of coverage are from 60% to 100%, and for the CAT level of coverage, 45%. You may ask, where is this program currently offered? We offer our GRP Oyster Crop Insurance Program in Louisiana and the following parishes: Cameron, Iberia, Jefferson, Lafourche, Plaquemine, St. Bernard, St. Mary, Terrebonne, and Vermilion. We currently only offer it in Louisiana, but we are working with the Texas Sea Grant to expand to some Texas counties. What will coverage protect against? Our GRP oyster crop insurance coverage protects against unavoidable loss of oyster landings that are directly caused by the following: a drought, flood, hurricanes, or other natural disasters. In terms of insurability requirements, you must have a share in the oyster production, submit an application that is accepted by the insurance provider, grow your oysters for the fresh market, be actively engaged in oyster farming, including harvest during the crop year, report the pounds of oyster meat landings by the annual reporting date, and provide verifiable records of your actual oyster landings, including zero landings by county or parish for the 3 most recent crop years, ending in the previous calendar year. So what do you need to do? In order to receive our crop insurance, the sales closing date or cancellation date falls on April 30th. So in this case, you should establish, modify, or cancel coverage. You can also submit an application for coverage. The annual reporting date for the GRP crop insurance is July 15th. At this time, you must report all landings of insurable oysters in the county in which you have a share. For the first year of coverage, you should submit the previous 3 crop years. For subsequent crop years, you can start from the previous crop year. The premium billing date for this program is March 1st. To be eligible for a premium subsidy for any policy or plan of insurance, including our GRP program, a person must have a completed and signed AD 1026 form on file with the FSA for the reinsurance year on or before the premium billing date for their crop insurance policy. There are several different producer types who might be in similar situations. For example, where they're not farming commodity crops on the land. This would include beekeepers, greenhouse growers, and aquaculture producers. In this case, we believe such producers can check box 5A of Form 80-1026. With that said, individual producers should always contact their applicable FSA county office to discuss the Form AD 1026 and better understand how to complete the form and which elements may be applicable for their operation. Other important dates you should consider: June 1st is when coverage begins. February 28th is the contract change date. During this time, changes to the policy, if any, will be published. Actuarial documents will also be published. The termination date falls on April 30th, and this is if coverage has been canceled. And the end of insurance period is May 31st. This is where we get into the details of your coverage over the next few slides. We will determine your policy protection. The first step is determining your dollar amount of insurance. This is your maximum price election times your price election percentage. Your maximum price election will be per pound and is published by RMA. Your price election percentage is a percentage selected by you. And for additional levels of coverage, you can select from 60% to 100%. And for CAT level, 45%. In the next step, we'll determine your policy protection, which is your dollar amount of insurance times your insured net apportioned landings. Your insured net apportioned landings are apportioned landings times the share. Your apportioned landings equal your expected county landings times your apportionment factor. We've offered you a few definitions to understand the terms. Your expected county landings equal your projected county oyster landings that are based on Louisiana Department of Wildlife and Fisheries data that are from privately held oyster beds and published by RMA. Your apportionment factor will be your individual 3-year average landings that are divided by the average county landings. And your average county landings are the 3-year average of total landings from privately held oyster beds in the county and published by RMA. All landings are in pounds, and both numbers are pulled from our AIB. And your share is your insurable interest in your oyster operation as the owner or operator at the time insurance attaches. In the next few slides, we'll get into how you determine whether you have a loss and what that indemnity is. There are several steps, and the first step is determining your trigger landings. This is the expected county landing times your coverage level. And again, the available coverage level is from 70 to 90%, and catastrophic or CAT coverage is also available. The next step is to determine your payment calculation factor. Your payment calculation factor is your trigger landings minus your payment landings divided by the trigger landings. Your payment landings are the amount of oyster landings for the crop year determined and published by RMA based on data from Louisiana Department of Wildlife and Fisheries. Your indemnity payment due will equal your trigger landings greater than your payment landings. The indemnity equals your payment calculation factor times your policy protection. Now we'll put numbers into these equations so you can better understand. Here's a policy protection example of where your maximum price election is $7.30 and your price election percentage is 100%. And that equals a dollar amount of insurance of $7.30. In this case, the producer was able to select or elect their 100% price election. We determined that your dollar amount of insurance is $7.30 on the previous slide. In the example, we are setting your insured net apportioned landings to $162,729. Remember, insured net apportioned landings are the expected county landings multiplied by your apportionment factor. And your apportionment factor is your individual 3-year average of landings divided by the 3-year average county landings. So in this case, you have $7.30 times your insured net apportioned landing of 162,729, which will equal a policy protection of $1,187,922. Next up is a trigger landing example. Again, your expected county landings are found in the AIB in our actuarial browser. So your expected county landings are 2,825,151 times the coverage level selected, 90%. So the trigger landing total is 2,542,636. In order to determine your payment calculation factor, we will take your trigger landings minus your payment landing and divide it by the trigger landing. In the previous slide, we were able to determine these numbers. So you'll take 2,542,636 minus 1,573,847 and divide it again by the trigger landing of 2,542,636 for a payment calculation factor of 0.381. Again, your payment landings are the amount of oyster landings for the crop year determined and published by RMA based on data from Louisiana Department of Wildlife and Fisheries. Finally, your indemnity payment calculation is up. And the numbers again were determined on the previous slides. So you have your payment calculation factor times your policy protection will equal your indemnity payment. In this case, it's 0.381 times $1,187,922 for an indemnity payment of $452,598. When will you receive a payment? So the amount of payment landings will be determined by November 1st following the crop year. Any payment due issued by December 1st following the crop year. Over the next couple of slides, we'll show you how to navigate RMA's website. RMA offers a cost estimator tool. If you go to the link shown on the screen, you can click Tools and Reports and also Cost Estimator. This will bring you to a tool that will help you determine your indemnity and the cost of what our program may be for you and your operation. Next up, RMA also offers an agent locator. If you're interested in finding insurance agents who'll offer you assistance in determining whether this GRP oyster crop insurance program is right for you and your process, you can find this agent locator in 2 different ways. The first way is going to our homepage and then click Find an Agent and then click Locate an Insurance Agent. The second way is scanning the QR code offered here on this slide. And next up is locating an agent for your operation. Here you see we've chosen crop as the correct choice for locating an agent for oysters. We understand that many consider oysters livestock, but it is important to click crop or crop and livestock because our livestock feature does not show agents that work with oyster programs. Lastly, how does the GRP crop insurance work with our FSA programs? FSA has a program called the Non-Insured Assistant Program, otherwise known as NAP. You can purchase coverage under NAP and GRP Oysters. And this is because our GRP Oyster program is currently in pilot status. However, if you have a loss, you are limited to indemnification under only one program. So you'd either get indemnification under NAP or RMA. There's also the Emergency Assistant for Livestock, Honeybees, and Farm-Raised Fish program. This is known as ELAP. You can have coverage under ELAP and the GRP Oyster program as well. But in this case, you may receive and retain benefits under both programs. Lastly, we thank you for joining us for this webinar. We hope this information provided to you helps you in determining whether the GRP Oyster Crop Insurance Program will benefit you in your process. If you have any questions, please feel free to contact me at fallon.goff@usda.gov.